Welcome back to Old Guy REI. We're back to do our Zoom highlights for our Wednesday accountability call for January 8th. Mikey's back with me. Um, and as usual, we had a lot of great things to talk about. Actually, we were kidding around because this meeting kind of went to the toilet, and we'll explain what we mean by that in a moment. But the meeting started out with one of our friends who actually moved out of his condo, which was his primary residence. And I believe he moved back home for a while to be able to rent his condo out to grow his savings for his next investment property, which sounds like a good strategy in my mind. Um, I guess as long as you're okay living with the person that you're moving back in with. Um, But a lot of the investors in this community are doing a lot of unconventional things, right? Um, that because we always talk about people today wanting instant gratification and they're not willing to do things like this to get ahead later on because it seems like later on is going to take forever to get to. Um, and then from there, we talked about mine and Cynthia's experience with this HELOC thing that we're going through, and we'll get more information on that. I think we might get approved for that sometime this week, so we'll have some news for everybody. But a lot of the people in the group had thrown out ideas of where we might look, where else we might look if we're trying to do a HELOC. And First Tech Credit Union was brought up. Um, there's somebody on online, I'm not sure if it's on Facebook or where they're at, but their name was Huang Tran, and they have some kind of a lending agency. You actually asked me about reaching out to local credit unions in the markets that we're in, and I did that. I I called six earlier in the week, and none of them offered HELOC on investment properties. Have you tried to get a HELOC yourself?
I haven't, but I'm glad you tried to call because when I was reaching out to local credit unions and I'm out of state, I would not get any response back. And the ones that did get a response back, when I dug deeper, on the surface level, it sounded great. But as I dug in, there were a lot of extra things that didn't make sense for me as an investor, where they limited me to three rental properties. They wanted to do an appraisal within the week of me just looking at a property, because when I talk to other lenders, some banks do that so that they can kind of get you locked in with them instead of preventing you from shopping the rates and things like that. And they even started out with a 2 points in fees. That's their beginning rate. So a lot of yeah, a lot of obstructions in the
Yeah,
beginning.
a lot of different requirements. Yeah. One of the guys mentioned a company called LendZen, LendZen.com. I haven't tried any of these yet because, like I said, we're really close to getting this one through. But we did have a couple other things we tried. We tried with Mark Simon and Nexa, and we tried our primary residences with Mr. Cooper. And I reached out to them. They don't do HELOCs, they do more of like a second mortgage. Both of those options were very expensive compared to the one we're trying. So maybe we'll do a video on that whole experience when we get through it. Um,
When could I ask, when you reached out on the phone to those local credit unions, what was the conversation like? Did you only ask about HELOCs, or were you asking maybe possibly in the future as a lending partner?
yeah, the feedback that I was getting was they were all in for primaries, but nothing really for investment properties.
Okay.
And yeah, it was kind of discouraging, a little bit discouraging because, like you said, we're both out of state. We're in St. Louis, you're in Pittsburgh, and that a lot of times that's the first recommendation of some of the other people in our group is to try smaller banks or local credit unions. So I I think the experience is valuable, so we can pass it on to other people. And maybe different states are different, but it seems like, we tried these two states. It might seem like it's that way across the board that, and then we've also mentioned the challenge because our properties that we're talking about are in the $70,000 range, and that lower price point is a challenge in itself. Yours are a little bit higher price than ours, so maybe you'd have different opportunities.
Yeah, but that's not gonna stop us from continually reaching out. And it was funny when we are doing the insurance thing, and for single families, I kind of had an idea of an average for a policy. Then this last one I got, the policy had jumped about several $100s, and that concerned me. And I was shopping. I was like on the sixth one, and I figured, okay, this is just where the policy is going to be at. Then finally, I found a quote that was on average with the other two I have, and it's been working out so far. I still have to wait for the risk assessor and what their list of improvements needs to be, but I'm happy. It's just an idea of you got to keep on shopping just to see what's available.
Yeah, and we talked about the different rules and things for each bank, but yeah, with credit, um, or excuse me, with insurance companies, it's kind of the same thing. One company will be super diligent about things like the age of the roof. Some don't really care too much. Some care a lot about whether you have knob and tube wiring, and that's been an issue in the past with us. And some don't ask. Um, and that's something, if the insurance company doesn't ask, but you have knob and tube and it's been an issue for somebody, what if they accept you and then later on when you have an issue, they say, oh, we didn't realize you had knob and tube and you're not covered for that. So it's better to be honest and all up front, give them all the information in the beginning so you're covered for something like that. And then like we mentioned earlier, well, one of our friends also mentioned that she's been using money from her 401k to buy properties. So because she really is fed up with the headache of um, conventional loans and all the requirements and all the hoops they make you jump through and things like that. So she'd rather just borrow from herself and pay herself back as the bank. And that made a lot of sense. But I think even with that, she was paying like 9% interest. And I know there's a little bit of difference between accounts because my wife has taken a loan out from her, it's a 403B, and the interest rate was 6%. But as she pays it back, she's paying 4% to herself, and then the 2% goes to the company that holds the 403B. I'm better with that than paying 9%, to it's almost like a DSCR loan. They're 9.5%. So again, different rules and regulations with different companies. So it's been nice to have the time to dig into these things and learn so we can share with everybody what we're going through.
I know it's fascinating because that's the first time I've heard of a blockchain-based lending software that does HELOCs. So you're not really dealing with a person. It's more, they're just, it's a blockchain base that's analyzing your credentials and financials, then coming out with those final numbers.
Yeah, it's really automated and it's hard to get customer service per se. If you have a question, the people that you reach on the phone don't know much. There's like the next level of manager or whoever that you really need to talk to. But yeah, I would suggest if the company that we went with was called Figure, and if you can look them up, you can look up. We Googled blockchain-based lenders, and it just seems like it's a pool of private money that you know they're lending from, and they won't give you any options for a loan unless you're above a certain stated income. So we tried 90,000 because that's closer to where we're at. But we actually had to go up to 120,000 before they would even kick out a scenario for us. And that was, borrowing 49,000. Um, the interest rate was 9.6. The fees were around 2,400. It's amortized over 30 years, and there's a 5-year draw period, like I mentioned in the Wednesday meeting. So once we get through this, we'll have more details to share with everybody.
And this was referred to you by Brian from Neighborhood Loans, so is not something that you just found. It is actually a reference.
Yeah, and from what I understand, Brian actually had to start the application for us, and then they supplied a link for us to continue the process. And not that he was out from that point, but he couldn't do any more either. We just had to submit our bank accounts and all of our other information. He did say that he supplied like paycheck stubs. He supplied, um, we ended up submitting our last 2 years of taxes, things like that. But also, I think I mentioned that my wife's Cynthia, she's a teacher, so she has a W-2 income. So they only use that. They wouldn't include me because I'm self-employed. So that was another challenge because, of course, she's only half of our income. So it was low. So again, once we get through it, we can share more details. But if you guys have any questions, you can email me or Mikey, and we'll answer whatever we can.
It's great on the ground news reporting. Where else are you gonna find information like this?
Yeah, yeah. Hopefully, it's valuable. But also, the friend that we talked about that was borrowing from her 401k, she she had just closed on a seller finance deal in Gary, and um, I thought that was awesome. But she was a little bit saddened by the fact that the 20-year tenant that was in the property decided to leave. They were paying really low rents, and she needed to raise the rents a little bit. And even a $50 increase was too much for them, and they decided to move. So now she's got the expense of a turnover, but she will be able to raise the rent substantially after that. So that's a good thing. Um, yeah, after that, the meeting turned to toilets, like we said, literally toilets. Someone had asked what kinds of toilets we use in our units, and I haven't had to change any toilets in any of our units yet, but I had mentioned, because I do residential remodeling, I like the American Standard Cadet 3 from Home Depot. That's always worked really well. Um, some of the other people mentioned the toilet that the lumberjack likes. It's a Gerber brand, and the model is a Viper 2. And you can get those through Home Depot, but they are special order. When I got the last one I went to a local plumbing supply house and they had them in stock.
What are the price ranges for those? A couple hundred?
The one at Home Depot is, yeah, it's about 200 or so. And the Cadet, I think one of the people pulled it up that night. It was 289 for the Gerber.
And then the flush capacity, what do you like? What do you usually like?
Well, I think it lowered here in California now. It used to be 1.6 gallons per flush, but now they want you to get to 1.2 gallons per flush. And that's not very much water. In some instances, it's not enough to push the waste. That there are different brands that have like I they call it like a power assist, but it's got an air tank in the tank of the toilet. So when you flush it, it has a burst of air that helps push the stuff through. Those are a little bit more expensive, but I did install one last year for a client that had, I guess you could call it slow pipes, but she was having backups kind of regularly because the original toilet just wasn't enough water to push the waste. But she hasn't had any complaints with that um, pressure assist toilet.
That was good insight you gave for all the different brands we were talking about, Moen, Delta. We are talking about faucets at one point. That was good if you could break that down again. That'd be helpful, I think.
Yeah, because some of the people at Home Depot, they have a brand called Glacier Bay, which is a very, very basic quality. And I wouldn't use that brand, but they do offer, American Standard and Kohler and Moen. I think in the job that we're
Delta.
doing, yeah, and Delta. Actually, Delta is what we're using in our current remodeling project. And they have a lot of nice choices too. You can get, the satin black or oil rub bronze, or most of the time it's brushed nickel is what's popular. You can even still do chrome. I think chrome used to be the least expensive. I don't know if it is anymore. But yeah, we just pick up stuff off the shelf. People even were asking about bidets. I don't know. Um, Nowadays, well, back in the day, Toto was like the brand for bidets, but it was the whole actual toilet. Nowadays, you can just replace the toilet seat with a bidet, whatever you call it, a bidet system. And but people started thinking it might not be a good thing for a rental because kids are going to be messing around with the making it into a sprinkler and running through the water and things like that. So that we and being on toilets, I think one of our friends in Detroit was actually thinking he might do an eviction already. He's only had the tenants in there a month, but they're they're clogging up the pipes with something, and he's had two plumbing issues in the last month where and the plumber was actually going to go out, I think, the day after our meeting. So he was waiting to see what the plumber found to see if they were going to charge it back to the tenant or if it was a flaw in the system. We've had that. We've had similar things. Like one time we got a maintenance request on one of our units because the garbage disposal wasn't working. And when they got there, they realized the rag had gotten down into the disposal, and that's what made it malfunction. So the tenant got charged for that. And that's not cheap. That was like $300 or something to send a plumber out there.
It's a good thing because since it was a recent purchase and he did the sewer scope, at least he has that as evidence if they do another camera to compare, saying, we have this as evidence and then this after, just to show.
Yeah, I think that we talked about that a little bit too, because the sewer scope typically looks at the plumbing outside of the house from the foundation to the street, but it doesn't typically cover the plumbing in the places we buy that with basements, right? You have that plumbing stack and it goes under the concrete of the basement toward the foundation. So if there's something wrong with the pipes there and stuff is getting caught on it, then the investor or the landlord would need to take care of that. Um, yeah, because if the pipe from the through the yard to the street has all been replaced, then most likely it's something that they're flushing disposable wipes or toys or whatever it might be. If it's a toy or something, then I imagine that could be charged back to the tenant because obviously that shouldn't be going down the toilet. But if there's an offset in the pipes or something under the basement floor and things are getting caught on that, then the landlord would need to take care of that himself.
Yeah, I remember there was talk about a class action suit, like a group suit against flushables, because those things are not flushable and they shouldn't be advertised as such.
Yeah, that's right. I forgot about that.
And the
Um,
multifamilies, all the stories you hear where you can't really pinpoint what tenant from what unit was doing that, and oh, that sounds like a nightmare. And but I'm sure there's ways to figure that out, sending
yeah,
in inspections or whatever needs to be done.
yeah. And that's what we were telling him too. If when they do snake, because typically on that section of pipe that's exposed in the basement, there's a clean out there. So they could put the cable down there to clean out the line. hopefully they'll be able to do the camera in that section of pipe while they're there, and it might be a little bit less expensive, but at least he'll be able to see if the pipes are okay in that section too. But we had that happen to us before where we had the sewer scope done, everything was good, but then the drain in the basement, that pipe where it connected to the main sewer line was clogged. So we had to go in after the fact and have a plumber clear that out too. So I don't know when next time we do a sewer scope, I will check with the company and see if they'll do it from in the basement to the street because then it's all the whole thing's clear.
That's been something I was thinking about as well, because I only have done sewer scopes from just going to the street,
Hmm.
not inside the main stack. And that's a great point. I didn't think about that.
Yeah, I wouldn't go as far as having them pull a toilet because you can do that too. Pull a toilet and then start from there and go down because they're going to charge you probably a couple $100 just to pull a toilet. But if you go in the basement, at least you know from there to the street is good. And we were talking the other day, you and I, about doing better and better on each deal that we do. I think this is one of those cases where we are able now to know better to do the whole line instead of just from out in the yard. So um, we're still learning.
And another point that was good was about the septic tanks. And there was one investor saying, "Hey, I'm getting backups." Then I think an investor from the same market said, "Has there been heavy rains?" Or he knew
Mhm.
there was rains and was saying those heavy rains can cause septic backups. So that was, I didn't know that.
Yeah, we have a similar situation at our house too. We had to kind of protect because on the septic tank you have two lids, and in our case, the water runs towards the lids, and if it goes in, that's a lot of water for the system to handle. So we had to cover all that to keep it dry during wintertime so that it was still just water from the house going in. Um, yeah, and they even mentioned putting an alarm on the system too, because you can put an alarm on the line, and that way, if it starts to back up, the alarm goes off, and you'll know to stop using the plumbing in the house until you get the system pumped or, figure out what the problem is before it backs up into the house. One of the people on the call was asking how we keep track of expenses. Um, and like, I think my example was because we have three properties that our property manager is going to take over, but there are some expenses that we're paying before it goes through the property manager. So, for example, we had to get the utilities put in our name. So we're paying those bills. So it's not going to be on the property manager's software yet. So I have all these paper receipts. I'm putting them in a folder and I'll add that up separately for our accountant at the end of the year. Um, One of our friends uses Baselane, which is free, he said, and that's one way he keeps track of his expenses because they're linked to the bank accounts and he has a debit card for the property. So anything he buys is recorded electronically and it goes into his software. And that's how he keeps track of it. How have you done yours so far?
That's a system and process I'm still trying to figure out. I was able to do taxes on only the one, but now that I have three, I'm trying to get those ironed out a little bit better.
Mhm.
I just use Google Sheets and all the invoices I get, I save it as a link and I link it to the sheets. And I'm just waiting for the property management to have all of their finances. And then I just copy and and
Okay.
paste it off of those numbers into the books. But I
Yeah.
don't know. I don't know if I'm doing it right.
Well, I think I was going to say, I think that's how Dion does his too. He just adds all the expenses onto his spreadsheet and turns that over into his accountant at the end of the year too. But like you and I were saying a few weeks ago, we need to get this system down while we only have a few units because it's going to be harder when you get more properties. one of the people on the call, he lives up above me here in California, but he was looking to invest in San Diego, and his thought was that he wanted to buy a property that had enough room to put an ADU on it. And he made a trip down to San Diego to check out the areas, and he went to a networking event. And through the networking event, he ran into a couple of other investors that they were getting in on a bigger deal, buying a property that already had I think it was a 3 bedroom, a 2 bedroom, and two 1 bedroom units on it. But the plan was to add four 2 2s. And I was commenting that although that wasn't his primary objective, just getting involved with that group might help him in the future with more networking to do what he wanted to do in the first place. Because this project is pretty big, right? Do you remember what he was talking about?
I don't remember the details, but I do know it was really massive, and it was interesting having the bonus ADU program in San Diego, and I also like maybe taking advantage of All Nighter Hider because he's a great handyman. And
Hmm.
even when they were talking together, they said, "Yeah, feel free to call me. We can discuss plans, what you guys have, and I can pitch in, or we can work out quotes or something."
Yeah, I know on that meeting, Ryan had offered to go look at any deals he was looking at if he needed pictures or anything. So that's another power of this kind of community. Everybody's willing to help. Um, I think that was nice of Ryan to offer. I don't think they met when Kevin was down there, but uh, it was intended that he could reach out anytime he had a question. He was also looking at another deal, and he was looking for anyone with experience doing the 50-40-10, which is a loan product that I think Dow with Velocity Mortgage has, right? It's and that is good when the seller has a lot of equity in the property and they can carry part of the, like, kind of be the second, and the investor can get in with as little as 10% down. Um, we have a few people, I think, that have done the 50-40-10. Matt the lumberjack has always said that he got his bank to do a similar product when they didn't offer one, but Matt is a pretty big investor in the area and he carries a lot of weight. So that was nice that he was able to get that option there in his area.
And it was similar. One of our investor friends has done a 50-40-10 with his bank, his credit union. So I guess the power of persuasion when you're a larger landlord.
Yeah, when you have a few units, that makes a big deal, big difference. Um, yeah, from there we got into some people telling stories about, like we mentioned, our Detroit investor thinking he might be doing an eviction soon, which is unfortunate because he just got the tenant placed. But one of the other people, I think he's in North Carolina, was saying that he's evicting a tenant after only having them for a month too, because they were doing things after they moved in that weren't on the lease, and so they've already broken the lease, but then they stopped paying rent as well. And he was saying that because he's a truck driver and the renter was a truck driver as well, making really good money. So the qualifying process, he vetted them well, but then after they moved in, I think he said the person moved their mom in and without his permission or knowing, and they were parking their Harley Davidson in the living room and things like that. So you never know, what could be going on. There was they were saying, drugs might be involved or something. They didn't know, but um, he was also saying that he appreciated these meetings because he gets to hear what we're really going through, and we share all the bad with the good, not only the good, trying to talk people into investing in real estate. I think, that's kind of a 50-50 on that one because you want to let people know the benefits of investing in real estate, but the more people you know, the more competition we have also. So you can go either way on that.
He said this line that really resonated with me was you have to laugh to keep from crying. And when you hear him talk, his demeanor, he's so positive and optimistic going through these things. It it actually gives you that energy because you know other people are going through it. You hear him and his demeanor and how he's still upbeat going through all of this. And it's like, yeah, it actually put some fire in me too. Because when I hear that, I'm like, yeah, let's keep going.
Yeah.
We're not stopping. We're gonna just keep on trying to grind it out every year.
Yeah, and I understand what you're saying. You don't like to hear that people are going through rough stuff, but that's what I've always said. When we talk like this and we share how tough it's been this year in particular, but that people would wonder why do you do that? Why do you put yourself through that? But like we've said before too, you can see the benefit, because when cash flow starts working the way it's supposed to work, or the properties, I should say, um, there's proof of concept, and I think it felt good for him because you realize you're not the only one going through it, and other people see the benefits too, and they're continuing to move forward, and that just helps us weather the first 5 years, as they say.
And things are just gonna be out of your control. And whatever you're faced with, it's how can I deal with this most effectively as a business and just don't take it where it's just so overwhelming, you can't deal with it. I've struggled with that too in the beginning, and without being in the group and being able to talk through all the issues I've been having first starting out, I don't think I'd maybe be as committed as I am now.
Yeah, speaking of that, not just on our Wednesday calls, but in the whole community, there's so many other things out there that we we've come to rely on and look forward to each week. Like you mentioned Dion's calls, and we talk about Matt's calls on Thursdays, and being in the school community, um, and things like that. What other what other things help you during the week besides our calls?
Oh, it's all the ORAD, REI Avengers, the Dion and Matt's live streams. You hear Zuber talk about that Jason Pritchard deal. That was amazing. So 78 acres of raw land for $1 million, 200 plus homes. He's never done this type of deal. And Zuber considers Jason Pritchard the Mount Rushmore of investors.
Yeah,
5 months he spent 40,000 in city fees and the like. Then 9 to 10 million to complete the finished lots. He signed 243 lots for $26 million. But within those acres of raw land, he carved out 13 acres to do multifamily. So for 1 acre is one multifamily, 390 units. He's gonna keep that section for himself, for his portfolio.
that's a lot of units on an acre. That must be a pretty tall building. I mean, once you consider parking and everything that you have to leave space for, but yeah, I wonder 300 units. Wow. That's, these guys are way, way above our level, but it's, we can always learn something even from them, right? Because a couple of Zuber's guests have come on and talked about their mistakes too. I think, I forget who it was that lost $1 million last year, or maybe I believe it was $1 million, but um, things like that. And you can see that even the big guys have trouble sometimes, and we don't always know everything. And the fact that they're willing to share the losses or the hard times too is really helpful.
And when Dion he does his every other month he does his course calls for just the group and for whoever signs up for his course. We found that to be so invaluable. And if you just wanted to talk, we just started the course calls for this month. If you just wanted to kind of go over some of the things we talked about, I thought that was really good, just discussing reserves and maybe giving you a better idea of CapEx and vacancy allocations to how you were doing it before. And even me, I might have to look at this and revise things.
Mhm. Yeah, because you and I were talking about, because we hear Dion say what he brings in each month, and he's got 18 units now. He keeps 50,000 in reserves. But you and I were talking, and since we're still fairly new and our cash flow isn't that great yet, we personally want to have about 10,000 per door in reserves. So that would add up to $100,000 today. And also the fact that the areas that we invest in might have a little bit higher turnover, or the buildings are a little bit older. So when we were running our analysis, we were keeping 15% aside for CapEx, maintenance, and vacancy. But Dion had said, we might want to raise that, and gave the example of what Millennial Mike's doing in Gary, because those properties are similar to what we get in St. Louis. So to raise that to 20%. And that made a lot of sense. And we asked him uh, if the amount of cash flow that he pulls in each month had an effect on what he kept in reserves. And it made sense, right? Because if he has 50 in reserves and he burns through that for some crazy reason, he's got all this cash flow coming in that can help compensate. But we don't have that yet. So we need to stock up a little bit better for now.
And it helped me because maybe I was getting too big for my britches and thinking, why don't I go instead of conventional, why don't I try to go DSCR for a larger multifamily? But you made a great point saying, what about your reserves? And Dion reinforced that, saying when he had about 10K in reserves, but then he got a fourplex, his reserves went from 10K to 30K. And I didn't even think about having those type of reinforcements. So that was a great point and really made me take a step back and say, no, just stick to the slow and steady, and maybe instead of a fourplex, maybe look more at a duplex that's in my price range that'll be able to afford, but also have the reserves to withstand that onslaught when maybe you first close on it, all the surprises start popping up.
Yeah, and I think as anybody's portfolio grows, it helps mitigate risks, right? If you just have, 2 to say 5 units, and you go nuts and you buy another one, that's going to deplete your reserves. But then you have maybe one tenant move out for some crazy reason, or you have a roof that needs to be done, you'll be in a tight spot. But if you, like you mentioned, having leases turn over today, and you don't know yet if the tenant's going to sign. If they don't sign, they might move out, and then you have turnover costs that are going to be, in our experience, it's been what, $4,000 to $6,000 for each turnover. So that's quite a bit of money. So I think you're safer. And like you said, instead of maybe buying a fourplex and spending all your money, get a duplex or something in a lower price range that will leave you some for reserves until you get that one stabilized too. That makes a lot of sense.
Yeah, thanks for that. On Friday, they had the out of state meeting. I was able to join a partial amount of it, but there were some good points. You had recommended Aaron Chapman, and we also like his YouTube. He does market updates. Paul, who was doing great. I don't know if he was co-hosting, but he was adding a lot of good knowledge. He had recommended Aaron Chapman. He said he's done a lot of loans with him. So I decided, why not reach out? they responded so quickly, and I have a meeting scheduled for tomorrow with Aaron. Just gonna discuss what I'm able to, my purchasing power and those type of things. So I'm glad for that recommendation, and also you mentioning him. And in that meeting, there was also talk of if you're doing your taxes, you could also use TurboTax. It's a free program all the way up until you actually file your taxes. So an investor recommended why not use that all the way up to the end just to see how your numbers match with your actual bookkeeping. So I thought that was valuable. And there was also a good point saying an investor out of state will actually put a Craigslist post up saying $1 for every picture of the unit you're looking at and 10 pictures minimal. And then they'll just do a Venmo payment just to get pictures of the area and get a good bird's eye view of what's going on the property.
Oh, that's a great tip. Yeah, and we've done two loans with Aaron Chapman from Security National Mortgage, and I've been on the phone with him a few times. And like you said, they're really responsive. They're very professional. Um, we've only done conventional loans with them, um, but the minimum loan amount is, I believe it's 100,000. So that's something to consider. That might have changed because it's been a year or so since we've done a loan with them. And but I really like he comes on every Tuesday and does similar to Zuber's financial daily news or daily financial news. Um, but I really like his take on the market. He gets in. He's got this chart that he uses every week, and he explains what he's talking about. That part sometimes you get a little bit lost, but he's what I like about him is he's always told people, if you find a good deal, don't wait, right? I really like that about him, and um, and it makes a lot of sense because I thought I told you before, I always thought I was getting in too late on not just real estate, but on everything in my life. Like all the good stuff had already bypassed me when I jumped in. But since then, he helped us buy our first place in 2020, I think it was. And if we hadn't, I mean, we've been through a lot with that place, a lot of trials and tribulations, but now it's going on 4 years of owning the property and things are looking a lot better. The rate, that's why I was thinking rates were starting to come up when we bought that. And I think I missed out on all these good interest rates, but we closed at 4%. So today, I mean, it's looking pretty good. So I like his advice. And I always joke that he looks like a biker, Michael Zuber, but that's what I consider him to be like. And Allie's the one who introduced me to him. She's known him a long time. Um, so that in that network is how we came across him. So that was really nice.
Dion has the gift of gab. Aaron Chapman has the gift of gab. And he is razor whip sharp. So I'm kind of looking forward to meeting him. What was the one-on-one conversations like? Is he just quick, fast paced?
He didn't rush you through. He didn't rush me through. He honestly um, takes the time. You sometimes you feel like when you go to the doctor, they only have 15 minutes to spend with you, so you don't feel like you can just talk and let them know how you're feeling. You got to get it in there or forget it. But like with Aaron and he's pretty patient and listens and offers suggestions, and then we've told people before, you can start a file with them. It's not going to hurt anything. Send them everything you have, and they'll do a soft pull. Just let them know you don't want a hard pull yet because you're just getting prepared. But at least if a deal comes up that they can work with you on, you don't, it's not going to take forever. You'll have a few more documents to sign once they get it to the underwriter, but you can get close to being pre-underwritten, and that'll save a lot of time and you'll know better what you really can afford. So I think it'll be great to talk with him and get your file started.
And I didn't think it was a big deal, but pay off all your credit cards, even if you have a small balance, it does make a difference. But I was surprised by that.
Yeah, I noticed that this month too because we pay ours off every month, but we have business cards and we have personal cards that are business cards, but the business cards that are linked to our social security numbers still report to the credit bureau, but the ones that are actual business credit cards don't because they're you use your EIN instead of your social security number. So it's a totally different thing. So I try to use the business cards if I'm going to have to carry a balance for any length of time because that won't show. But yeah, you're right. Anything on a personal card will affect your debt to income ratio. And, you have to do a lot of explaining because I always had to tell them I pay this off every month. It's high, but I pay it off every month. And sometimes they have to wait until you pay it off and then run the DTI.
I forgot who said it. It's probably the REI Avengers, but they're saying underwriters would be the life of the party, and I always laugh when I hear that.
Yeah, we always talk about that headache because you think you're doing great, you get the pre-approval letter, you think you're all set, and then oh no, I got to send in all my documentation. Okay, now I'm set. Now it goes to the underwriter and you don't know in the beginning you don't know. So, and the underwriter, once the underwriter has it, they're with you until the minute you close. So they can ask you for information, we thought we were all set, we were going to close and it was 2 or 3 days before closing, and then they asked for another thing before we closed. So we don't celebrate until we're signing documents. So
Absolutely. They are like Jaws, Jaws in the water. What's next? What's next?
yeah, yeah. And before we wrap this one up, we were talking earlier because when we first started this channel and these videos and things, we would talk about music because I've always said I love music. It can't change your mood. Nothing can change your mood as much as a good song. And you have mentioned, it can take you right back to some moment in your life. So what are you listening to these days? What?
So we're talking about music memories, and I just have to mention this was a high school band that I enjoyed back in high school. Their name is Kiahivai. They're a Hawaiian band, and the song is Promised Love. I recently went to a neighbor island, Kauai. I've only been out there for work. So this was my first experience just trying to take a trip with my girlfriend out there. And I'll always remember Kauai now with that song because you go out to the hotel, they had a really good discount rate for locals. And I figured why not just try to, how Chad Carson talks about plateaus. So we try to keep it as budget friendly as possible, but enjoy our time there. And just being around the pool and the jacuzzis and walking out, you're 5 minutes away from the beach, watching the sunset. And then while the night comes in, I would just have that song in my ears. It actually, the bar was playing it. So it brought up memories of high school and just was enjoying my wine. And it was one of those moments where you hear the music, it brings up those high school memories, and you're just kind of taking it all in and thinking about the future and investing and where you're at now in life. And it's so powerful what music can do and bring you back or make you think about things.
Yeah, just since Cynthia and I have known you, Cody has come out 2 times, and I really agree with what you're saying about when you hear something, it brings back memories instantly. But you made me laugh earlier because you were talking about oldies you used to listen to in high school, and your oldies and my oldies are very different. Your oldies might have been 80s and 90s, but mine were like 40s, 50s, and 60s. And I told you I was lucky that my whole family was crazy about music. When I grew up, being very little, I remember just always the family listening to music and dancing and well, probably for a different show, but they always ended up fighting. So we'll have to talk about that someday, maybe in Vegas because it'll stay in Vegas. They but for me lately, and I get surprised sometimes because Pandora will I still listen to Pandora, but when I'm on YouTube, sometimes I'll run across a band or something, and lately I just ran across this one called The Vintage Explosion, and the song is Sweet Love, but the guy has an incredible voice, and when I hear a song, to me it's always new because I haven't never heard of these people before. But then when you do some research, the song came out like 8 years ago, and you wonder, how could I have never heard this or whatever? But it's really good, so people should check it out. Um, and uh, it's just kind of funny how you made me think. So you've been investing now for going on 3 years, and I can imagine you've learned quite a bit in the 3 years. I know we have learned a ton, and you feel like I don't think we're ever going to know all there is to know about investing. But I was talking to a friend the other day, and like Zuber always tells us, just to concentrate on one strategy, right? In the beginning, we were thinking, long term, short term, midterm, wholesaling, flipping, and Bigger Pockets was really good about distracting us with all of the fluff. But you can't make any progress that way. And Zuper, you know, he wasn't. I don't think he was talking directly to me, but he always says, stop just stop all that nonsense, concentrate on one thing. And we did start making a lot better progress that way. And then after you get that down, then you can dive a little bit into different things and other things that interest you.
I know investors are different. Every investor is different. And some people just are hardcore and don't ever stop. But for me, I do need a little time just to unwind every day. And music helps me with that, or exercising helps me with that. And sometimes I'll take those small sections of unwinding time, and it gives me that extra juice for the next day to tackle what I got to take care of and networking and doing it 20 minutes a day and rent box, buy box, all those things. That's a lot of work. So it's good to have that short amount of unwind time, plateaus as Chad Carson talks about, to kind of regroup and get your mind focused again.
Yeah, sometimes it's a little hard because, like you said, I would say we're pretty hardcore. Our core group within this big community is uh, is very intense and very focused, and they just want to keep moving forward, and that's really nice. So sometimes, even though, like you said, we know we should take a break, sometimes it's still a little bit hard to do that. But once you do, then like you said, you come back better than you were, and so it is helpful, I think, to be able to unplug, even if it's just like going out to a nice dinner with your girl or going, taking a weekend off from watching all of the content, things like that, because that's always in my head. And it's almost like, if you decide to go somewhere and don't take your phone with you, would you ever consider doing that? But if you did, it would be amazing.
And it's funny because that's why I'm looking forward to Vegas, because even though we're gonna unplug in Vegas, we've actually added a couple more days just to enjoy. We'll still be talking high level management and what are your goals for this year, or what are you working on now, and we'll toss back ideas back and forth. So that's an unplug, but maybe some other people would think that's work, but for us it's not really that.
Yeah, no, I think it's pretty enjoyable. It's going to be a pretty enjoyable weekend, just like last year. Um, yeah, so that'll be awesome. So we'll come back next week. and do this again. I appreciate your time.
Thanks as always.
All right. Thank you. We'll see you soon.
Okay, bye.